Hi folks, Dan Bird here with the daily scan for Tuesday, the 17th of December. So since it's Tuesday, this is Technical Tuesday. Today we're going to talk about the Relative Strength Index, the RSI, and some of its cousins. Some of them are cousins twice removed, but some of them are similar. So I'll cover all of them and you'll get a chance to see everything and make a decision of which one you like the most. The RSI is found on just about every platform and is used in many, many charts. So it's been a staple and been around for quite a while. So I'll talk about what that does and how it is different from some of the other things. Quick disclaimer, of course, I am not a financial advisor. Nothing I say today should be construed as investment advice or recommendations to buy or sell. If you do plan to or would like to engage with an investment advisor, then you could go to this website to check them out. So let's go first. Let's go to the home page. There's a couple of things I want to show real quick before I get into the RSI. One is something that I learned today from Dave Keller. Dave Keller is a contributor on stock charts, and he also has his own platform. He's got some really interesting videos that he does on YouTube as well. So he is a great technician. I would definitely recommend checking him out if you want to learn more. One of the things that he showed today was in the sentiment area, actually breadth. So I just added this breadth chart. Bullish percent index is something that he showed. If you remember last week, I showed a chart where all of the sectors were moving into the lagging lower left-hand quadrant, except for the aggressive sectors, discretionary, technology, and communication services, which is where most of the magnificent, actually it's where all of the Magnificent Seven are. So what he pointed out with this bullish percent index is it tells you the percentage of bulls there are for each of the indexes. What I have highlighted here is the S&P. Let me turn this on. S&P in this panel. And the NASDAQ 100 in this panel. Now the NASDAQ 100 is where the Magnificent Seven, Magnificent Eight are located. And what I want to point out, clearly the market is continuing to go higher, trying to make a new high. Now, I'm doing this before the close. It's about 2 o'clock in the afternoon East Coast time. So we're about 2 hours from the close, and I'll look at what the market looks like here in a second. But that's where we are right now. The gray one is the NASDAQ 100, just moving higher as the S&P is moving sideways. You can just barely see that right there. But the important thing is the bullish percent index of the S&P, ever since this vertical line right here in October, just before October, end of September, which actually was the first Fed cut, right about there. So what you can see is the percentage of bullish stocks in the S&P is down 25% since October. However, the percentage of bullish stocks in the NASDAQ 100 is pretty much flat. So again, this just confirms what I was saying before, that the market is being held up by those Magnificent Eight, those big tech names, other than NVIDIA, of course. But all the rest of them continue to go higher, and they're holding the market up. This is something that we need to keep an eye on, because if this one down here starts to break down like this one up here has, and heads lower as much as the S&P has, then the whole market's going to fall apart. I don't think that'll happen before the end of the year. I think we'll probably still do pretty well into the end of the year and maybe the first week or two in January. But after that, now I'll come back and refer to this again later each week or so and see how it's doing. But if this one starts to, it's already ticked over a little bit. You can see over here on the zoomed in version. You can actually see the difference quite a bit better over here in the zoomed in version. But if it starts to head lower like this one has right here, then the whole market will be in trouble in September. Doesn't mean the market's going to crash or, lose 80% of its value or anything like that. It just means it's going to have a correction, probably a healthy correction. It needs to anyway. But this is something that we will continue to watch to see how it does. Okay. Just wanted to point that out. Let's look at the market real quick at basically right around 2 o'clock. Oops. Let me go back to that. S&P, you can see the Dow, it's down. S&P is down. Dow is down the most. The NASDAQ 100 down here is down about 0.5%, about the same as the S&P. The VIX ticked up slightly, so a little bit more volatility coming back in. Bonds, the 10-year actually is moving down slightly, so you can see it for the whole day right here. It's definitely down. And the TLT has come down. We started off moving up and then it's pulled back a little bit during the day. And the dollar is just kind of going sideways. Commodities mostly down. Here's gold. Gold is trying to make a comeback here in the last couple of hours of the day. Same as silver, gasoline. Let's see, oil. We'll look at oil, gas, and natural gas. Natural gas is doing the best. That's the best performer of all of these. Crypto. Bitcoin 106, up $600 today, a little more than 0.5%. So it took off in the morning and now it's just kind of going sideways. Made it up to 108, a little above 108 earlier today. So going sideways now. So we'll see if that continues. On the sector side, discretionary and real estate and healthcare are leading. So bifurcated sector leadership here. Real estate is a defensive sector and had been going significantly lower. Healthcare also had been dropping off and it's trying to make a comeback today. Discretionary has just been continually going higher, powered primarily by Tesla and Amazon. Communication services is hanging in there, just kind of going sideways. And technology is right down here, about somewhere in the middle of the pack. You can see that energy continuing to go lower, financials going lower, industrials, materials, all of these continuing to go lower, staples going lower. We'll look real quick at the top 10 list. SelectQuote is the big winner so far today. It's a low price stock, had a big, huge up move, and now it's pulled back to about the middle of its range for the day. I don't know if that's earnings related. It might be. Lunar is number 2. Actually, this one looks pretty good, starting to move up. And good buddy GameStop, getting near a breakout point. Let's look at the bottom of the list. Marvell, significantly pulling back. This one here was one of the winners a couple of days ago. Credo Technology, pulling back today as well. Max Linear, pulling back. We go back to 24, SoundHound is here. Actually was pulling back and now it's starting to recover for the day. So it's been pretty strong. Here's Vistra Energy. Vistra Energy was one of the utility stocks that was the beneficiary of AI, and it looks like it's rolling over. Here's Broadcom, which had a great run, and it's basically in the middle of yesterday's range. Reddit is a new one. It's up near the top, so it doesn't look too bad. Actually, right down here on the bottom, 24, 25, we'll go one more back. IESC, we've talked about before, continuing down. VRT, that's continuing to go down. But here's GE Vernova going sideways. Overall, Robinhood still hanging up there. Overall, if we're looking at the bottom 23 to 25 list, so there's 3, 9, is about 12 on each one of these pages. They actually don't look too bad. Some of them aren't too great, but overall, they're not looking too bad. 14% is the biggest down mover. Marvell, these two are 9% and 6%. We just go one more back, 4 or 5%. So actually, overall, not too bad for the whole list. So that's interesting. So let's take a look at the topic for today, which is relative strength. So one thing I want to point out, and by the way, I'm going to use Bitcoin as my example for this. So all of those Bitcoin fans probably will like that. So let's start with the relative strength index. I'm going to look at some other ones that are similar to this. So relative strength, by the way, anybody can get this. I don't think you need to even need a subscription. You can go to Stock Charts, and at the top of the page, there's a chart school. Just go there and put in the search bar box RSI, and you can see the description that I'm going to read to you here. So RSI basically is it is a bounded oscillator. So that means it has an upper and lower limit. And because of that, it can help you identify oversold and overbought areas. So anything above 70 is overbought, and anything below 30 is oversold. However, and basically what this does is it takes a period, and the default is 14 days. So over a 14-day period, which is actually described a little better down here, over a 14-day period, it will identify the gainers and the losers and calculate those together to draw a line to show you whether, relatively speaking, so back 14 days of its own data. So it's not relative to other things like the S&P or some other index. It's relative to its own data. Back 14 days, it will plot whether or not it is stronger or weaker than the last 14 days. So it also, but divergences is one of the best ways, I think, to use the RSI. If the price is moving higher, but RSI is moving lower. So remember what this means. That means over the last 14 days, there have been more decliners than advancers, or more negative days than positive days, even though the stock is moving higher. That gives you an indication that the price may be ready to reverse, may be ready to follow the relative strength. And that's often what happens. So that's a really good use of that. You can also use it to identify trends, which actually is one of the great ways to use it. Right down here, so it can come down to the 50. Remember, this is a bounded oscillator, so it's got an upper and lower limit. So if it gets down to 50, that means it's in the middle. But if it gets the lower limit around there is 40, that's the standard that most people use. And you'll see I have it on my charts as well. So I often will draw a line at 40 right at the bottom down there. And you can see in this case, the stock, this is the S&P, continued to move up, came below 50, but just hit the 40 area and went back up again. So that's a good way to use it. Positive and negative divergences, I talked about that. There's also another way that you can use this on a much shorter term basis, which I think is talked about in here, if you want to read through this with more detail. And that's, instead of a 14-day look back, use a 2-day look back instead, right here. So short-term traders sometimes use 2-period RSI to look for overbought readings above 80 and oversold readings below 20. Now, I want to stress that this is for short-term traders, and I'm talking about a couple of days to a week at the most. And I actually have it on one of my buttons, just out of curiosity. I like to look at that every once in a while. If I look at, so here's the S&P that I showed you before. I have a button over here for RSI 5. I use 5 instead of 2. But what you'll see over here, here's the RSI 2. It's below 70, below 30 right there. So that's oversold. So as soon as it comes above that, that's a short-term buy signal. And you can see it only stayed there for 3 or 4 days. So if you want to use that as a very quick move and do it as soon as it signals, it'll go up here, signal right there above the 5. Many people use the 2. I like to have it a little bit more smoothed down and not as much noise. But it hit right here, and then you can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days. It went up before the top, actually 14 days before the one up here, signal a down signal instead. So that's just one way that you can use it for options, or you can use it for very short-term trading. All right, so that's relative strength. So let's take a look at it on the Bitcoin chart. So here it is, relative strength. You see the 70 line, the 30 line. I've drawn in the 40 right down here. Shows you, gives you a little bit more leeway than the 50. And a couple of things to point out. Number one, when it's overbought, you can see very clearly it's way up above the line. Now, the RSI works best whenever a stock is moving sideways. So it gives you the better signals when it comes down below 30 and then goes back above it. It happened right here. And we had a rally right there. It happened right here. And there was a rally right there. So the other way is to look for divergences. So you can see right here where the stock was moving slightly down, but the RSI was moving slightly up. So that's a divergence. One has to be different than the other. Just because this is going down, if the stock is going down too, that's not a divergence. So if one is happening and the other is going the opposite direction, that's a divergence. But the other way you can use it is to see where the RSI stops going down. So, just looking at the 70 and 30, that's the way a lot of people typically look at it. But I think that is maybe the third or fourth thing to look at. I like to look at, if the stock is moving up, is the RSI making higher lows at the same time, like it did right there? So you can see, made a higher low there, and also right there. Made a higher low there, also right there. This is just confirming the uptrend is in place, and it's heading towards an overbought condition. However, as you can see, just because it's overbought above 70 is not a signal to short the stock. It is not a signal to sell everything and get out of it. That is not how the RSI works. The RSI is a bounded oscillator. That means when it's above a certain boundary, it is overbought, but it can stay overbought for a very long time. And you can see that right up here. And it is still overbought, even though it pulled back. I mean, you might think, oh, look, it went below the 70, so it's time for me to short it. Well, that would have been right there. Might have been disastrous to try to short it there. So that's not really the way to use the RSI. I like using it with looking for divergences, looking for this 40 level, see if it can stay above it. That means any downtrend is going to be temporary. That's the way I think the best way to use the RSI. So let's next take a look at another indicator. And by the way, the way to set this up is on your, if you're in stock charts, and RSI is on pretty much every platform. So you should be able to find it anywhere. It should look similar to this. To do it on stock charts, you just come down to the indicators down here, click this little down arrow and pick RSI. The default is 14 periods. You can change that. You can change it to 2 or change it to 5 if you want. I'm making the height of the panel here half the size of the price up here. And then I'm putting a horizontal line in right here. That's how I put the 40 colon pink tells me what color I want it. So you can put blue, red, whatever color you like. All right, let's look at the next one. The next cousin to RSI that I'm going to talk about is money flow index. So again, I click on the little window down here and go find MFI. Money flow index, again, notice it's 14 days. I'm going to put the same height to make it 0.5. And there it is. There's money flow. Now, what is money flow? So if we go to stock charts and go to the charts and tools, or actually the chart school, money flow essentially is an oscillator that uses price and volume to price and volume. So rather than just using price over a 14-day period to tell you whether it's been higher or lower during that period, like the RSI does, it incorporates volume as well. And this is down here is a great description of it. MFI is also known as the volume weighted relative strength index. And in some ways, it actually is a better way of looking at things. You can see, as you can see right here, if we compare it to the RSI, which is above it, you can still see the divergences. So you can still see right here, it went below, and you can see the divergences. There's lower high or higher lows as it's moving up. So this was moving down right here, and it gave a higher low right there. So that was a divergence. But it's a little bit more smoothed out. So in this case, it went up here. So it's using volume as well. So volume is a really important component of price. Price and volume is really the basis for everything. in technical analysis. And this just tries to interpret those in a different way. So you can see it's very similar to the RSI. It's just a little bit more smoothed out than the RSI. So that's money flow index. That's the next cousin. The next one I'm going to show, which is not exactly a cousin to the RSI, but it's more similar to the money flow index. And this is one that people might get a little confused about. And that is the Chaikin money flow. So that can be found right here, Chaikin money flow. I'm going to show you how I put these on my charts as well. So this typically uses a 20 period. I like to change it to 21 just because I like Fibonacci's. Chaikin money flow, again, in chart school, it explains what it is. Instead of now a bounded oscillator, it uses the zero line. So anything above zero means it is in a bullish configuration. Anything below zero means it is in a bearish configuration. And it uses the accumulation distribution line in this case. So the MFI, money flow index, uses the same, basically the same calculations as RSI and just adds volume to it. But the Chaikin money flow uses the accumulation distribution line instead and adds volume to it. So now it will help you understand whether money is flowing in or out of a particular stock. And you can see that it looks different because it's using the zero line now instead of a bounded oscillator. So these two up here use 70 and 30. This one uses 80 and 20. This one here doesn't have an upper and lower limit. It just has zero. So it's very binary. It's either bullish or it's bearish, or it's becoming bearish or becoming bullish. So you can kind of see divergences using this as well. But just a very quick and easy way to identify things is to, this is a 21-day moving average. I'll show you how I also use a 65 so I can get a longer term money flow incorporated with a shorter term money flow to see what's going on. So these two right here both say that they are money flow. They just calculate differently. But this can be a great one just to very quickly visualize whether money is flowing in or out of a particular component. You can see right here, money flow is below zero through this period here, even though it's hitting higher lows. So all of these will say never use this only. You always have to use it in conjunction with other indicators. And I will reiterate again something that I said on the Zoom call on Sunday with subscribers, that number one, you never use just one indicator. Number two, don't try to use everything. Don't keep switching between indicators. Try to use every single indicator. You'll just get confused and they will all give you conflicting views. You need to pick the ones that you like, understand how they are calculated so that you understand what it's telling you, and then stick with those. Pick a limited number and stick with those indicators because each one has its own personality. And you have to understand and learn the personality, and that takes time to do that. If you keep switching around, you will never be successful in trying to use indicators. All right, the next one I'm going to show you is the advanced decline line. So like I said, it's right here, accumulation distribution line. Now this is a cumulative indicator. So rather than a bounded indicator or a binary indicator, plus or minus, this is cumulative. So it just keeps adding to the previous information. And what this does is it takes the number of days that ended above the halfway point of its range, and it subtracts the number of days that it ended below the halfway point. So think about what that means. If a stock sells off in the morning and makes a recovery in the afternoon, it will end the upper part of its range. Even if it might be lower for that day, like this one right here, you can barely see it, but that one right there might actually be lower for the day. It still logs a higher accumulation distribution because it ended in the upper part of its range, the upper half of its range. If more and more days end in the lower half of its range, then the accumulation distribution line will go down. So if you compare this to the Chaikin money flow, which basically starts its calculation with the accumulation distribution, but instead of it being cumulative, it is bounded by a particular time frame. It's not a bounded oscillator. It doesn't have an upper and lower boundary, but it uses a specific time period to do its calculations, where accumulation distribution doesn't. It just accumulates or makes it cumulative over time. So that's kind of the difference between those two. All right, now I'm going to talk about a couple of other ones that are not cousins of RSI, but look kind of similar. So the first one I will use is the stochastics. And I'm not going to go into detail about how these are calculated because they're not the same as RSI. But a lot of people see them and say, oh, that's got an upper and lower, and so that must be just like RSI. But it's actually not. Here is the stochastics. And what first thing that will jump out at you, hopefully, is that it's much more busy. So you can still do the divergences or the trends. So you can see that it's going up right there as the price goes up, which is what it should do. Right here, it's during this period, it actually was flat. It was flat right here when this one was coming down. So it has a limit to how far down it will go. And the best way to use this is when it crosses back, when it goes up and crosses back over to the downside. But what you can see, and this is one of the reasons I use this as a secondary or third level indicator, is it can go above the 80 line and stay there for quite a long time, right there. Now, when it did cross back below it right there, that is when the downtrend started, but it doesn't really tell you how long it's going to last or how powerful it will be, but it is a way to identify an entry point. So if this oscillator is near the top, then the stock likely is moving higher. If it's coming down and it's halfway down and the stock looks like it's starting to move higher, it might not be ready yet. It might still come all the way down here. So you want to wait until it starts to move up. I'll show you how I use that on my charts as well. All right, so that is stochastics. The next one I want to look at is Williams percent. I had a question about this from somebody on my Zoom call. And this one you will see right away. This is created by Larry Williams. And what he did with this is he took a similar calculation to stochastics, but now he uses 3 different time frames for it. So you can see right there, it looks very similar to stochastics. And it moves very quickly, but it's coloring in the overbought and oversold areas. But again, you can see it can stay overbought or oversold for quite a long time. So the key for this is wait for the crossover. You don't know for sure whether that crossover is a good one or not, because it can move right back up again and stay overbought for a long time. That's one of the reasons I don't like using these so much. It can certainly help with identifying turning points, but each person needs to make their own decisions and decide what indicators they like. I prefer PPO, frankly, but I actually like the idea of the MFI up here using RSI, but adding volume to it. I kind of like that idea. And I do use the chicken money flow, which I'll show you in a minute. All right, the last one I want to show, which was also created, actually it's called the Ultimate Indicator, also created by Ultimate Oscillator, also created by Larry Williams. And actually, this is the one where he uses 3 time frames. So I'm sorry, I misspoke on that other one. This basically uses something similar to the stochastics. This uses 3 different time frames, short, medium, and long, so that he can smooth out the oscillations. To me, there's not enough of a movement for me to really identify it. Although if you're using any one of these indicators, and I go back to my comment about getting used to its own personality, you can identify entry and exits with any of these once you really get used to how it works. So that really is the key to any of these indicators. So those are all the ones put together right there. I actually would prefer the ones that I'll actually show you what mine look like. So that's all of them. The RSI is the first one up here. You pretty much find that on every chart. And I use the Chaikin money flow, and I also use stochastics, but it's a third or fourth indicator. So let's look at my buttons. My default right here, there's a PPO at the top. But what you'll notice at the bottom is the accumulation distribution line, and right below it, the Chaikin money flow. So remember what I said when I showed you the one before. It was using the Chaikin money flow was using the accumulation distribution, and instead of it being cumulative over time, it identified a particular period that it's going to compare it to. In this case, 21 days. So what I do is I put the 21 days on here, but I also put a 65-day in the background, which is actually green. So you can see here it's got, in this case, it's a 13-day. I've actually just changed this to 21, so I'm going to change this right here. 21 day. So that's what it looks like. So the 21 is the gray one in the background, and the 65, which is, think of this as a monthly view, 21 days, and the 65 is a quarterly view of money flow. So if both of these are above zero, then it's just confirming that money is flowing into, and you clearly can see that with Bitcoin, definitely flowing into it. And then I put the accumulation distribution right over the top of it. Now, on my next chart here, actually, one of these, I thought I had stochastics, but a lot of times I'll put stochastics in the background of the PPO. I didn't do it on that one. This is the RSI 5, which I showed you before. You can see it very quickly moves below and above that particular line. All right, and so that's pretty much it for the RSI. Let me know if you have any questions or if there are any other indicators you'd like for me to cover. Oh, here's the stochastics right behind this one right here. So yeah, I use this on the RSI 5. You can see the stochastics right behind it. I put it very light behind the PPO, behind the MACD, basically, because you can see that it stays elevated for quite a while, even though the MACD is moving up. So it helps you to identify an earlier entry. So the MACD moved or crossed right there. MACD and PPO are the same. I did a technical Tuesday, the very first one on this. So that's the MACD crossing, but the stochastic started to move up even before that. In fact, when this crossed, stochastics was already back at the top. So it helps you to identify an earlier entry. Again, right there, moved up right there, but came right back down. So you need to use all of these things together in conjunction with each other to really make this the most effective. So you can see it stayed up here above. It's in overbought territory. Looked like it was going below there, but the MACD didn't. And then it did look like it was going below there too. And then the MACD crossed right there. So that gives you your sell signal. You can see right there is where the sell signal would have been. So that's the way I like to use the stochastics in the background behind the MACD. All right. So that's it for Technical Tuesday. Thanks for watching. Let's real quick take a look at, see what the market is doing. Let's see. Yeah, I'll use this. Go back to the dashboard. And equities. So it looks like it's continuing to move lower, actually. So it's preparing for tomorrow, I think. We'll see if that's going to continue, depending on what the Fed does, or if the Fed gives good news, will the market starts to take off. But I think right now the market doesn't want to be long going into tomorrow's meeting. NASDAQ 100 is actually come down a little bit. So it's still heading down as well. There's what it looks like, intraday, daily view, and then a weekly view. So intraday, it is still heading lower. And the VIX is moving up. So both of those things are not positive if you're bullish. So it hasn't come back to its low of the day yet, but it looks like it's heading there pretty quickly. So we'll see how it ends the day. The stocks in the scan were all down today, obviously. So they haven't, none of them have hit their stops. This is was the worst looking one. Actually, it's come back up. So it's made a recovery at the end of the day. So that's good. This one actually was down quite a bit as well. Yeah, it's still down. It's almost an engulfing candle right there, but still has not hit the stop at this point. And then actually looked pretty good yesterday. And it's okay. Has come down a little bit, but not halfway down from yesterday's move, and certainly well above the 21-day and the stop. And RDW also, it's trying to recover. In fact, it's 1360 is at the top of its range right now. So it's actually, let me see, 1360, and we got in at 1349. So it's actually positive for the day. So that's good to see. One that I removed that never executed yesterday and then looked terrible in the morning. We'll see what it looks like now. That one right there. So it's actually sitting right on what would have been the stop. So if it had executed, it didn't. I had an order in above the price and it never got there. I think it was yesterday. I think I said it was 7 cents or 3 cents away or something like that. But today it opened gap lower and just started to sell off lower. And so I removed the order. So I'm not even considering buying this at this point. But you can see if it had executed yesterday, it would have stopped out today, one day. That's okay. That's what stops are for. So, and then let's see, just out of curiosity, Google is a shooting star, so that might be a reversal. If that continues into the close, we'll see. We're already out of half of this one, but now we're just letting the rest of it ride for as long as it wants to go. It'll be a gain no matter what, but it could ride much higher. So you can see right there, if it comes back down, it's going to be a 1.9% gain on that one. And then DTM, which I looked at yesterday, actually it probably stopped out today. Let me see real quick. Hadn't looked at it lately. So I showed that with some of its peers in its group. Yeah, DTM stopped out. So that one has stopped out. We can go back and put the information in here. Our stop was at 98. So it stopped out at 98. Today is 12.17. So 6 days, lost 3.9%. So that one's gone. But that's what stops are for. And stopped that at 98. And what did I say it was? It's at 98.39. So it actually came back, went down below the stop and then came back up. It's actually near its high. So might continue higher, but doesn't matter. We're out of it. So I did not use the squeeze in order to buy this one, by the way. Just out of curiosity. This is my squeeze chart. So you can see right here, it did not have a squeeze. These are all green dots across here. So that will be a criteria in the future. This one I should not have gotten in. I got in right there on that candle above the 21-day moving average, but it was starting to head down here on momentum and there was no squeeze. So that's something that we will not do in the future. That's what the point of all this is to learn things to do and not do to try to improve. That's the idea. All right, thanks for watching. Hope everyone has a great day and good luck. We'll see what happens tomorrow. I'll try to be on tomorrow night with a wrap up of the Fed meeting, see what they did. But good luck trading, everyone. Take care.